Okay, it's Sunday the 24th of April. Let's have a look at the FTSE. Just quickly before I go over that, I want to go over something I see quite a lot with traders and also people who teach trading. It's important to remember that when you're trading on a candlestick chart, it's nothing to do with just finding patterns in the chart. You know, a lot of people trade like that, but you've got to remember that all these candlesticks is a representation of what price has done over the time period that you are in. Very large traders, a very high portion of them, they don't even look at candlestick charts. They use things like the bid and the ask. They use things like order flow, volume. You know, they have a lot more information than we can get from our brokers, basically. All the candlestick chart is doing is giving us clues as to what is going on. The reason it's very important is because if we take a support and resistance area, let's have a look. There's one roundabout here. You can see the market has reacted off of it right here, and which means most likely if we go back, there'll be more reactions. Yeah, okay. So we've had a very large reaction here, very large reaction here, and then we have the market here falling down into this area. Now what you tend to find is if you're trading on the daily time frame, people will dial down into maybe the 4 hour, the 1 hour to try and get their entry points. Is this a good area to look for buying with a swing position? Let's say you're wanting the market to come back up into the next realistic level of resistance before you close your first position. Is this a good area to buy from? It's a support and resistance area. Maybe you got your signal on the lower time frame. It's not a good area to buy. The reason it's not a good area to buy is because this chart is showing us that price is absolutely collapsing. People are trying their best to get out of whatever stocks they're holding. They're dumping everything and the price is falling down. You have to understand that this is a representation of price, and you have to be thinking about that when you're taking positions. The reason for that is because really, as a retail trader, you're looking to jump on the back of professional traders. You know, we don't move the market. Retail traders do not move large markets. It just does not happen. So we're looking for big institutions, banks, you know, hedge funds, whatever, to move this market. And to do that, we need to find prices that are sensible and price action that is sensible. This is giving you a very large clue that it's not a good area to buy. But I know that lots of people will have bought from this area and got stopped out. And the reason for that is because they're just looking for patterns. They're just looking for support and resistance areas. And they think that's enough to trade from. If you do trade like that, you know, I'm sure there's, well, in fact, I know there's lots of traders who trade like that successfully. And what I would say is, without engaging your mind, I suppose you would say, without thinking about things more than support and resistance and reversal candles, you're going to have very large drawdowns. Yeah, you might still be profitable, but your drawdowns are going to be very large, and emotionally it's a lot more difficult to handle those types of drawdowns. I'd much prefer to have, you know, break even or very small drawdowns and build my account steadily, rather than having an account that's going up. And then, so if we say, you know, let's say we make 15% one month, but then the next month we lose 15%, then we make 18%, then we lose 15% again. You know, this, you know, it won't exactly be like this, but the drawdowns, what I'm meaning is they're going to be very large. You know, you've got to think of yourself sitting through a month of trading where your account is dwindling by 20%, 15%. It's emotionally very difficult. And also, you know, there's nothing to say you're not going to have 2 months that are going to run like that, and you're going to lose 40% of your account. For me, it's not the way to trade. The market is telling you everything. It's representing price, and if you follow it, and if you learn to read it properly, you can have a very good trading system. So the market has pushed up, made a pullback, pushed up, and made a pullback. Sorry, so it has came up into the area we identified last week, which is right up here. This is going to be a very strong area of resistance. Down below, what we can see is, we already know we have this squeeze of price here, and also we have swing high here, and we have this swing high right here. So there's quite a lot of strong support and resistance areas on this chart. You can actually see the market's pulled back and it's had its reaction in here once, and also when it gapped down here, the reaction has came twice. What we may see going forward now is the market bouncing in between these areas, trying to break out both ways, but it's going to be relatively, especially if we get down here, price action is going to become relatively choppy. If you're trading intraday, the market pulls down into here on the lower time frames, the markets are going to jump around a lot down here. Even if it breaks through on the daily chart, intraday this is going to be quite choppy. So you want to be careful down here. Really, for me, the main area would be the highs of this squeeze. I'd pretty much avoid it in the center, and then I'd be looking down towards the bottom also for those levels. Just letting the market tell me what it's doing, as always. Up here, very, very good area for shorting opportunities still. And the market is now above the 200 moving average, so we have to look at it as more positive. Let's have a quick look down here. So we've had two touches. Really want to look at, let me just get rid of these, next week, the coming week, is how the market's going to react now that we've met this area of resistance. Is it going to keep retesting it? If it is, I'm more than happy to keep shorting from up here until we start breaking through. But I want to see if it's going to keep retesting here, and if when it retests, like here, we start getting very strong selling pressure coming in and pushing the market down. If we get down into here, as I've mentioned, in the center of it, I'll be very careful. It would have to be very clean price action and very strong zones before I'd take trades. But the top, the bottom, very nice areas to trade. Perhaps with the swing high also, I'd need to look at that on the day that the market was down there. Okay guys, so hopefully that was helpful, and I hope you all have a great trading week.